Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you founders, co-founders, entrepreneurs, executives, musicians, artists, thought leaders, you name it, across the world of crypto and blockchain all around the world. And today I have an amazing guest. He is currently the co-founder at Kinto. He has a background with Y Combinator, with Memorial Labs. Welcome, Ramon Recuero. Ramon, welcome.
Thank you for having me.
You're very welcome. Thank you for being here. And we'll kick things off with the first question. And what is your background? And is it a logical background for what you're doing now?
I don't know if it's logical or if it's a bit too crazy. You tell me after I answer. My background is in computer engineering. First, I'm from Spain. I studied there. And then soon I moved to the US to study a master's in computer science. And after that, really soon, I developed a company in the gaming space. I was building social games. This is when Facebook games were all the rage. Think about Farmville, Wars with Friends, that kind of applications. And it went really well. I got actually acquired by Zynga. So then I work for this company building Farmville and building other social games. And actually, a really important thing happened while I was there is that Facebook changed the algorithm overnight over how games monetize. And that's one of the three things that led me to crypto later. In this case, it's that if you build on a platform that is owned by another company, at any time they can rug pull you, they can change the rules of the game, and they can destroy your revenue. So that's one of the first points that led me to crypto. Then after I left Zynga, I worked for a few companies in the Valley, including Google, where I led a team in Google Cloud, Moz, that was an SEO company. And then I jumped onto the other side. I worked for Y Combinator, the famous incubator that funds a lot of startups in the Valley. And there I was already following crypto 100% and focused on helping founders in the space. And during my experience there at Y Combinator, that there was the second insight that led me to crypto. YC, as you know, it raises a lot of money from different LPs and different people to invest in different startups. And they do this process that works really well, doing the batches that they take like hundreds of startups every year. They fund them, and then eventually 7 to 10 years later, they return the money from the successful exits of these startups to the LPs. I saw this process and I saw the potential for crypto to facilitate asset allocation. How easy is both to raise money from any people in the world in seconds, just with a smart contract, and then how easy and automatic is to return the profits and the funds earned over once they accrue to a fund automatically. And actually, this insight is what led me later to create this DeFi protocol that was called Babylon.finance. That was a DeFi protocol to help you invest with your friends in different opportunities in DeFi. You can think about it like investment clubs. You could invite your friends, say, hey, let's all pool money together, and then we're going to invest in USDC or buy Bitcoin or buy Ether, etc. And now, because of smart contracts, because of crypto, you can do this at a fraction of the cost of normal ETFs or normal funds or something like Vanguard was able to do in the past. So there is a huge potential there to unlock in the next 10 to 20 years. But unfortunately, one thing that happened during my time at Babylon.finance last year is that another protocol in the ecosystem, Rari, got hacked. And it got hacked by 80 millions. And the way our protocol works is that we gave the tools to our users to create these investment clubs and invest in the opportunities that they wanted in the rest of the ecosystem. And then some of our users invested in this protocol. And then 5 million of the money that was deposited in our application was lost because this other protocol lost the money. And then there were a lot of shenanigans that came from a bit small and immature founders and entrepreneurs where they said they were going to refund the funds. They eventually changed their mind, and they eventually changed their money again. And, our users they saw in the user interface before that they had $20, and then it changed automatically to 15 because a percentage of those funds were gone through a hack that, although it had no responsibility from us, it came from the ecosystem. And this is one of the major insights, that crypto is not going to grow when the user needs to have a PhD in computer science to be able to use it, first from a user experience, and then they are having their money stolen left and right, first through hacks, then through scammers like FTX, Celsius, everything that happened last year. More than 20 billion were lost last year. So crypto has a lot of potential, a lot of things it can unlock. In the end, a lot of financial freedom for people. But if we don't get the space to mature, then this value, unfortunately, is not going to be unlocked. And this is the final insight that led me to build Kinto. That I'm building Kinto as a platform where my previous project, if it was built on top of it, would still be alive, because it's a lot more secure, and these kind of hacks or scams are much more difficult to pull off.
Sounds to me like you have a perfectly logical background for what you're doing now. So yeah, I'd say yeah. You asked me, I'd say yes. So, um, yeah, I'm interested to see. I want to talk more about your new protocol and Kinto. What it is all about. How you support both modern financial institutions and decentralized protocols. It seems like you do both. I want to see how you do it and why you think you do it well.
Yeah, that's from the beginning has been the whole insight behind Kinto, trying to create the perfect bridge between the wild west of DeFi with traditional finance. Because on one side, DeFi has been alienating all the sophisticated investors, all the TradFi, because telling, oh, we don't need you. We can do everything so much better. There is no need for regulation. But unfortunately, even if these kind of people that are a bit idealistic and they think, oh, the tech can solve all these problems, they may be right, but they may be right 20 years from now, because the regulation needs to catch up, the pipelines need to catch up, the ecosystem needs to catch up. And if you want to really create value now, that is what entrepreneurs and founders do. If you want to start onboarding people and solve real problems today, you need to meet and solve these problems that institutions are facing when doing things on chain. They need to be able to be compliant. They need to meet their counterparty requirements. They need to do KYC and AML, even if they don't want it, because their government, their local regulations are going to force them to do so. So we're building Kinto to create this bridge between TradFi and DeFi, and done in a way that is as decentralized as possible, because we are doing this KYC AML functionality, but at the same time, it's still a public open network where it's governed by its users and its participants.
KYC and AML, they're important, right? So they're essential pillars to bring in institutional players. Why is that?
Yeah, there are many different reasons. One of them is like the compliance department of any major bank, think JP Morgan, Bank of America, they are not going to whitelist or approve any project that invests on this public network or in this crypto project, because it doesn't meet their counterparty requirements. Then KYC and AML, of course, there is also a lot of both regional and international jurisdictions that you need to meet, from OFAC compliance. You need to make sure that your project is not helping terrorists or it's not helping countries that are in the sanctions list. Because even if all these news are overblown in the media, like for example, lately they said, oh, a lot of terrorists in Hamas were founded by this, and then it turned out that no, it's actually maybe just $1 million, but they didn't know how to read the on-chain data. I think a lot of these things are really overblown, but still, we need to do this as good as we can make it, because it's not enough to meet the same requirements that TradFi or what TradFi does today. We need to do it 10 times better, because the cost of switching technology, the cost of switching applications, the cost of switching for the user is a lot of friction. So you need to be 10 times better. And the cool thing about crypto is that enables 10 times cheaper asset issuance. Then it's 24/7. It's not like the banks. It's not like your Robinhood account or your JP Morgan account that it closes on weekend. It closes every day at night. Crypto is always on. And it has like the highest availability. It almost never goes down. Something like Bitcoin, something like Ethereum never goes down. Then and it has been really resilient. You know, the cryptography, Bitcoin have never been hacked, Ethereum has never been hacked. So there is a really strong foundation that you can use to deliver really strong institutional guarantees. Because these institutions so far, what they have done is like they have looked at the crypto wall and they have seen, oh, this is way too dangerous. This is crazy. Look at all the scams that are happening. Look at SBF. Look at all that crazy stuff. And they have tried to build like private networks. So it's like, oh, I'm just going to build my blockchain and I'm going to talk with my two partners and just we're going to use it together. But doing a private blockchain kind of defeats the purpose. In a way, it's kind of like in the early days of the internet, you have these private networks, these private companies that tried to create the intranets. They said, no, don't use the internet. It's dangerous. It's just pornography. It's just scammers. It's just a lot of bad stuff. Just use our safe network that we are building where everything is safe. But in the end, that because the cool thing about crypto, the cool thing about the internet is that everyone can build on it. It's free, it's open, and then there is a lot of innovation. You don't know what's going to happen. And I cannot tell you today, or Andreessen, that is the creator of Webscape, when the internet was invented, it's like, what do you think is going to be the best use case for the internet? The best one he could come up with was an internet library. And then, we have things like Uber, Airbnb, etc. The same thing is going to happen with crypto. But right now, it's really obvious that one of the best use cases is going to be improving efficiency, reducing costs for financial infrastructure, and then helping with real world asset issuance. That is a niche that we're focusing on.
I have a what if follow up for you because you mentioned OFAC, and OFAC's one of the reasons why I'm in crypto and not in TradFi at all. I am on the OFAC list. Well, I'm not. My name is. There was a Syrian Air Force war general with my name who's like 13 years older than me on the list, and like banking has been a nightmare ever since 2017 for me, right? So what if OFAC is wrong? What could there be a better platform for data, and why is it important to have a standardized, or accredited data, storage platform or center or intelligence agency, for data across the whole entire crypto universe.
Yeah. Yes. First, sorry, because I know how painful and how time consuming must be dealing with all that, having dealt with some institutions in the past. I think the main game changer here for crypto is transparency. And in Kinto, because we are having KYC and AML from block zero, it means that all the transactions that are going to happen in the chain, they have been done by participants. It's important to know that in Kinto, we don't do the KYC ourselves. We let the user choose their own KYC provider, and we let the user also govern what's the list of potential KYC provider. What this means is for you as a user, you will be able to choose who you trust the most. For example, you will be able to pick Stripe if you like Stripe because you think they are much more helpful than an other company, and they are really good at doing KYC. They are really good at doing AML. They verify the AML, they double check it, or you can choose some other participants. And then once you are verified, then you can transact with all the other nodes of the network, but your information is never available online. Then if an application, for example, something to invest in treasury bills, say, hey, Jamal, do you want to use it? Then I also need to know your date of birth, your social security number, whatever. Then you, with a signature, similar to Facebook pop-ups for permissions in the past, you are able to say, okay, I want to give you my date of birth, I will give you my social security or whatever, and then you can give them that signature. And then that platform can call the Kinto network with your signature, and then they will be able to fetch your data. But it's important to know that Kinto doesn't know who each address is, and even the KYC providers, they don't know who you are either because they don't have your on-chain address. So we have split all the parts in the process so we can still achieve compliance, but we are still preserving user privacy and diminishing the risk of hacks, breaking the information, the essential information in different places.
You mentioned Babylon, right? And you also mentioned the amazing CFI implosions that we saw in 2022.
Yeah.
I'm a Celsius customer, right? I still haven't seen my money back yet. But crypto has a few promises. Blockchain has a few promises, right? One of them used to be, and I don't know if this is still true, banking the unbanked, right? Is that still a promise of blockchain technology, despite all the implosions and the bank runs and everything that happened within the last year and a half?
Yes, I think so, and I think it's happening. The unbank is a really complex concept because you can think about many different groups there. You can think about people in Africa. You can think people in the emerging world, but you can also think, for example, in societies like Argentina. And I spent a lot of time there because I also work for Open Zeppelin, the people that created the original ERC20 token, and the company was based there. They have something like 100% inflation every few months. So people there, and they're actually forbidden to use dollars. So there is like a huge black market for the dollars because people need to put their pesos, change them to something else as quickly as they get them to avoid getting their money, their value stolen by inflation. So everyone is using their stable coins. So I think in some segments, it's already happening that a crypto through stable coins, in this case, they're already helping communities to escape oppressive governments, helping preserve their purchasing power. And it's just going to increase. For example, I think in Africa, there is, it looks like not so much, but it's growing quite quickly and it has more penetration than more developed markets. I always say that in the US, people are usually the demographic that gets crypto the least because when you tell them about the governments print a lot of money, you need to preserve your wealth, inflation, they have not seen hyperinflation recently, in a long time. So that's why they don't really understand it. But other countries that have lived in this kind of, for example, Eastern Europe, Turkey, Czech Republic, South America for sure, then they really understand it. So there are a lot of use cases. The problem with crypto is also it's too many things at once. It's a store of value for some people like Bitcoin, and people compare it with gold. They call it digital oil, Ethereum. That is a platform for all applications that is going to be like the new internet, and it's going to support a lot of traditional finance. Then you have NFTs, art, to be able to help artists, and there are a lot of artists actually in emerging communities, emerging countries that are making a living through selling art and selling NFTs. And also another area that has not delivered to their promise yet is even gaming. In the past, even in the Philippines, games like Axis or even Stepping, they allowed people to make a living by being good at these games. Of course, it imploded because they're kind of, in the end, you need a game that is really good, and then you need a good crypto mechanic on top. Just the crypto is not gonna work if it's not a good game. But if you have a good game, think about something like Roblox or Minecraft or something like that, and then you add the crypto feature on top, then it can deliver a lot of value. But it's gonna take time. The same way the internet took like 20 years until something like Uber, something like these applications appear. The same is gonna happen I think it's gonna happen faster because now we have the internet to build upon, but it's gonna take maybe a few years more.
I hope it's not 20. I'll be like in my mid-70s. I'll be like, my kids will benefit. So, built-in insurance, right? So if there was built-in insurance, right, for Black Swan events, right, would that be something that's important? And I think, why would that be more important now than was, would ever before?
Yeah. Going to my previous project, that's one of the big insights that is like, okay, people are not going to care about investing in this really good investment opportunity if there is a chance they're going to get hacked or they're going to get scammed or someone is going to steal their money. That's why it's really important to build these shields. That is something that TradFi offers. For better or for worse, if someone, for example, with a credit card steals your credit card and then swipes it, then usually, at least in the US and in Europe, you can get that money back. You can cancel the credit card and your bank usually will say, okay, that's not a transaction. And also, as we saw this spring, when the banks are starting to fail, the Fed step as a lender of last resort to avoid like a chain reaction. That creates a lot of different problems, but at least they resolve the acute crisis. So in Kinto, we are, besides having the KYC and AML that reduces the chances of hacks, because a hacker will need to first steal an identity. And this is the same that happens in TradFi. You can steal the identity of someone, clone them the credit card, the social security number, whatever, but it's a felony. So someone needs to do that, and then they need to use that identity to hack the smart contracts. So it's less likely. Then we also have the other protection of this insurance pool. We're gonna redirect part of the fees of the network, the sequencer fees, basically what users are paying for transactions. Part of that is gonna be redirected to this insurance pool that will cover black swan events for the network. So as the network grows, this insurance pool is gonna grow as well to protect users in case of this event.
It's interesting that you said that we have Rails, and then you mentioned the banks. My theory on the banks is different than most. My theory is that the banks had executives and board of directors at those banks that had runs in California who had no background in CCAR, had no background with the regulatory compliant laws of the country, and just were handed jobs without those backgrounds. The rails were there, but they didn't abide by the rails. Isn't in crypto we are forced to abide by the rails because the rails are the smart contracts? Wouldn't that be safer than traditional finance?
Yes, I mean, one of the even in traditional finance, you have some of the biggest micromanagers like Jeffrey Gundlach. He always says we don't need the Fed. We just can use the 2 treasury yield as the curve. We don't need 10 people deciding every 3 months, looking at the sun and say, okay, the price of money is going to be higher or lower. It's like just let the free market that is smarter than every single individual do it. And the same way, that's what crypto can do. It's like it has all these transparent rules that are gonna be enforced. They cannot be cheated. But at the same way, it can learn, it can be flexible, it can adapt, but it doesn't need to depend on any specific person or group of people or committee that you can tell. If you look, for example, at central banks, and you can pick any central bank, I don't want to pick on any country, you can look at their projections. Their track record is abysmal. They never, for example, in the US, if you look 2 years ago, the projection of inflation for the next few years was always like 1%, 2%. Even 2 months before the inflation started, it was still at 1%, 2%. I mean, economies are really complex systems, so this is not easy, but it's also difficult to have a track record of that magnitude.
You said we don't know hyperinflation here, but I went to the gas station this morning and I paid $100 to fill my tank, and I had sticker shock. I'm like, oh boy. Okay, so, what do you think if this insurance had been built in? Say you had built it in like a couple of years ago, right? Before the bull run, before the craziness, before the implosions, right? What do you think? And because the industry might look like this in a couple of years from now, what do you think the industry would look like today? And what can we look forward to? Because we have a lot of growing to go.
Yeah, I think for users, how crypto will look like in a couple of years, it will just be invisible. You will just be using financial applications. You will not even know that it's crypto behind it. The same way that right now for this code, we don't know if it's happening through Google Cloud or it's happening through Amazon. But 20 years ago, 15 years ago, everything was so painful that you needed to know exactly all the tech to be able to do this. But in crypto, it's going to be exactly the same. The tech is going to become invisible, and it's something that we are doing also in Kinto. We're going to help users create accounts that are still non-custodial, meaning that only the user has access to their funds. But at the same time, they don't need to worry about installing MetaMask, worrying about gas, worrying about sending transactions, worrying about storing those 24 keys that are really weird. My mother wouldn't know what to do with them. And then in case when bad things happen, you can have like a similar TradFi experience where automatically some either through insurance or either through risk mitigation techniques, some measures are in place to avoid this thing. And so it's going to look like maturity, and you're going to have real consumer applications that maybe are a bit more boring than all the stuff that we have been seeing in the last 2-3 years, but deliver real value. And things like FTX won't be able to happen. But it's normal that these things happen. There is always a rush when a new technology appears, and everyone tries to capitalize on all the value of that technology before the value is delivered. It's happening now with AI. AI right now, I think, is getting ahead of the actual value, and it will deliver it, but probably it will take a decade or two. The same happened with the internet in 99. Everyone ran to invest in pets.com and all these companies. Then eventually Amazon, Google, all these companies came, but it takes a lot longer than when people are investing. It's like, oh, it's already delivering trillions of value. No, it's gonna take a decade to deliver those trillions of value, but everyone gets so excited. It's how manias work. The same with the railroad. If you go back, it was the same, and with the gold rush, the oil, it's always the same thing. It's like, but usually bubbles are right. They're just early. It's gonna happen a few cycles later. Will usually, when the actual value that was kind of forecast by the bubble materializes later.
You just gave me an additional question. I thought about that. I just thought about it as you were saying it. 2020, I think, that summer, the Chainlink holders and the Aave holders did really well because it was DeFi summer. I didn't consider that being a bubble in DeFi, but it might have been, right? Was it a bubble? Was it just the beginning? Where are we at in the DeFi compared to where that summer was? And are we going to see another DeFi summer this year?
Yeah, I actually think DeFi is probably one of the verticals that has been treated the worst. Because a lot of value has actually been started to realize, and the key pillars of DeFi, like Aave, Compound, the key protocols, Chainlink that are working, they're gonna become like big pillars of financial infrastructure. I mean, this is not investment advice, of course, but I see these DeFi projects coming back. I think in the last cycle, a lot of people got really a bit lost with NFTs because NFTs were like the new thing of the moment, and then DeFi kind of went to the background. But eventually, these things come back. Everything is cyclical in life. So I think DeFi, and the good thing is like only a few projects will be able to capitalize on that value, because in DeFi summer, you have 400 different fruits and vegetable projects that they were all farming tokens. People was really, really happy. A lot of memes around farming, how it's not much, but it is honest work, and they were able to make a living farming. But all these projects, a lot of them were just games and just people experimenting with the technology really early. But a few of the protocols have proved their resilience. When everything exploded last year, all these centralized players like Celsius, BlockFi, etc. What didn't explode was DeFi. The protocols like Aave and Compound, when the value of the collateral went down, they took it, they sold it, kept working, same block, like if nothing happened. Those protocols work perfectly to what is written in the smart contract. These pillars are gonna be there, are gonna support the next wave of innovation.
So those pillars are there, and Kinto is new. And I want to find out how Kinto fits into the network, and then how you mentioned financial applications, how Kinto and why Kinto is the best network to launch new applications, and what those applications will look like for the future.
Yeah, thank you. Yeah, in Kinto, we're building this platform to help people create applications that meet these regulatory requirements and these compliance requirements. So you can build a DeFi application that is still connected to all the good money Legos that have been built on DeFi, like the money lending protocols that we were talking, like Aave or Compound, or like Uniswap if you want to trade. But on Kinto, we don't want to redeploy and copy all those things like other networks say. It's like, oh, let's deploy everything again on this network. No, on Kinto, we just want to be the platform for all the new applications that require regulatory compliance. For example, you want to issue treasury bills on chain. You want to do real world assets like home equity loans. You want to tokenize an equity fund and put it on chain. And then the cool thing is you can compose these assets with all the things that are already in Ethereum. For example, you could create a simple fund that puts 60% on KYC'ed, and then with the other 40%, puts it on these other in treasury bills, for example. So you can create a 60-40 that way. There are so many opportunities. Or you could, for example, just go 100% long with STETH, then put it on Aave, and then borrow dollars and use those dollars to put them in treasury bills. So you also have a yield, an extra yield. So in Kinto, we're going to offer developers the bridges to connect with DeFi, but also with the tools to be able to meet the compliance and regulatory requirements they need while being on an open platform that is connected to Ethereum. That is the main hub for liquidity, because it's where the users are and it's where the innovations are. And we believe it's the main fault that TradFi has been doing up to now, that is just creating private blockchains and not going where the developers and the liquidity and the users are.
You mentioned earlier yield farming. I guess you're talking about Yearn and stuff like that. Is that still a thing? What's the future of yield farming? Is that going to be rolled into the products?
I think yield farming, it was in a way really early, because in the end, once regulatory gets more advanced and more developing crypto, in the end, it's going to allow new business models. And there is a lot of debate, for example, about the Uniswap protocol turning on their fee system. And in the end, that's how it's going to look. It's a lot nicer. It's a much better way to capture value for your users and your token holders. For example, you can say, okay, every time a transaction gets made, X bips go to the protocol and part of that bips go to the token holders. So that's how it's going to work. The farming, I think it was like a summer of euphoria, and people were testing all the potential things. And it's kind of like creating leverage to trying everything that could be tested was tested. And I think there are a few best practices that you will see them in more mature products. And hopefully when regulations get a bit more developed, then teams, and especially US teams, will be able to test and play with these new business models.
That also makes a lot of sense. So, very good. Awesome. So I want to thank you very much for your time today. I enjoyed speaking with you. I do have one last question, and it's how can people find it? It's an easy one. How can people find out more information about you, about become a potential client, start using your applications? How can they do any of that?
Thank you. Yeah, the best way is Twitter. You can find my personal profile is my name and last name, Ramon Recuero, all together. But for the project, you can also find us on Twitter, and it's Kinto XYC, Kinto with a K. And then there you will find also our link to our Discord, where you can get in touch with us, ask questions, become a member of our community, because in the next few weeks, we're really excited. We're gonna start launching the network, and it's gonna be a multi-month process, and we want to onboard as many users as possible.
Awesome. Thank you very much for your time today.
Thank you. I really enjoyed it.